When guests start watching every dollar, big booking platforms have no choice but to respond. We've seen Airbnb expand beyond just stays, adding experiences and services to reach more types of customers. Vrbo, meanwhile, is building more value into stays, offering guests more flexibility, doubling down on discounts, merchandising, and trip variety. But did that pay off? Let's take a look at Vrbo's financial performance for Q2 2025, what worked, what didn't, and how the brand strategy has evolved since Q1. Back in our Q1 coverage, we predicted certain moves from Vrbo. Now let's see how these predictions stack up against reality. Hi, I'm Uvika Wahi from RSU by PriceLabs, a leading source of short-term rental industry news, analysis, and data-backed insights, helping professional managers make smarter decisions in a fast-changing market. Today, we're breaking down Vrbo's Q2 2025 results and comparing them with Airbnb's latest performance to better understand where the market's heading and what that means for your business. Before we get into the specifics of Vrbo's Q2 2025 performance, let's set the stage. The US short-term rental market isn't collapsing, but it is getting tougher. We're not talking about a market in decline, but rather a slowdown in how fast it's growing. If we look at data from PriceLabs STR Index, which by the way is a free tool where you can check the latest market data at the country or regional level, you'll see exactly what's going on. It's a great resource, not just for property managers, but also for journalists and analysts too. For the US in 2025, this data shows that occupancy is slightly down year over year. Average daily rates are still inching up, and RevPAR is holding steady. That's the classic sign of a competitive environment. Demand is still there, people are still traveling, but the way they're traveling is shifting. And with supply still growing, guests have more choice than ever. That means they can be more selective, take more time to shop around, and yes, watch every dollar. For Vrbo, this context matters a lot more than it does for Airbnb. Unlike Airbnb, which has spent the last couple of years aggressively expanding internationally, Vrbo still relies heavily on the US leisure travel segment. So when growth in the US slows, Vrbo is obviously going to feel that pressure more sharply. Which brings us to Vrbo's Q2 2025 performance. This was the quarter where we expected Vrbo to lean heavily into promotions, merchandise, and trip flexibility, all to win over those price-sensitive guests in its core US market. But did it work? Let's break down the numbers to see where Vrbo gained ground, where it struggled, and how its strategy stacks up against Airbnb's approach this quarter. In Q1, we saw Vrbo treading water in its core US market. Demand was there, but growth was sluggish as the US short-term rental market cooled. Q2 brought a slight improvement, but growth still landed in the low single digits. According to Expedia Group, which owns Vrbo, that's roughly in line with the overall US market trend. Under the surface, though, the numbers tell a familiar story. Lower average daily rates, shorter lengths of stay, and higher cancellations. All of these point to travelers being more cautious, prioritizing flexibility, and shopping around for deals and booking trips that are easier to cancel or change. When we compare this to Airbnb's performance in the same quarter, the contrast is clear. Airbnb booked 134.4 million nights and seats, up 7% year over year, and also saw ADRs take upward. But Airbnb's strongest growth was not in the US at all. Latin America and Asia Pacific delivered double-digit growth for Airbnb. Booking.com also showed a similar pattern with its biggest gains in Asia Pacific and Europe. Vrbo doesn't have that cushion. With its business still heavily concentrated in the US leisure travel segment, it feels the effects of a slowing US market more sharply. And it also has to fight harder to hold its ground. Vrbo may not have Airbnb's global footprint or Booking.com's reach in Europe and Asia Pacific, but it does have something else. The full weight of it. Now, Vrbo may not have Airbnb's global footprint or Booking.com's reach in Europe and Asia Pacific, but it does have something else. The full weight of Expedia Group's technology stack, merchandising know-how, and marketing muscle. Instead of spending years and millions chasing new markets, Vrbo can tap into tools and capabilities it already has in-house. And in Q2, that's exactly what we saw. Vrbo leaned heavily on merchandising and promotions to drive demand. Back in our analysis of Vrbo's Q1 performance, we flagged the warning signs. Guests were becoming more price sensitive, booking windows were shrinking, and US competition was heating up. Vrbo saw the same writing on the wall and moved fast. In May, they launched their promotion suite, a set of tools that make it easier for hosts to offer discounts. Hosts can run last-minute deals, early booking offers, mobile-only discounts, etc. A lineup that looks a lot like what's been working for Booking.com for years. And it's catching on quickly. Within just 2 months, 10% of all Vrbo bookings were already coming through promotional rates. The biggest push right now is on last minute bookings, which is a fast growing trend as cautious travelers wait longer to commit. Vrbo is responding to the trend, for example, with a last minute getaway TV campaign, which launched in June. And then Vrbo also introduced a dedicated filter in the app for last minute deals and on screen prompts like, "This host offers a reduced rate for booking within 30 days. Even their social media posts click through to pre-filtered last-minute listings. It's a coordinated merchandising effort, and it's paying off. For professional short-term rental managers listing on Vrbo, this means opting into promotions can boost visibility, since Vrbo, like Booking.com, is prioritizing these offers in search. The key is balancing promotional participation with consistent pricing integrity across all your channels, of course. Airbnb, meanwhile, hasn't rolled out a branded promotion suite, but it's spent the past 2 years quietly increasing price competition on its platform through other features, making discount visibility and competitive pricing part of its broader strategy. And promotions aren't the only lever Vrbo is pulling either. In Q2, we also saw the brand broaden its focus beyond the classic week-long, once-a-year family getaway. By offering more trip types, such as weekend escapes, shorter midweek breaks, Vrbo is working to capture bookings that might otherwise go to Airbnb or might go to hotels. The idea goes beyond just filling calendars. It's about making Vrbo relevant for more moments in a traveler's year. In 2024, for example, Vrbo added roughly 1 million urban listings from Expedia's platform into its own inventory. That move was a clear signal that the brand intended to go beyond its hallmark, week-long, leisure-focused family stays. Well, because US traveler behavior in 2025 is changing. Shorter lead times mean guests are booking closer to their travel dates, and they're also booking shorter trips. Shorter vacations often translate into more urban stays, and thanks to this expanded inventory, Vrbo is now in a position to meet that demand. Pair that with last-minute deals and the new filtering options, and the platform can capture audiences it might have lost to hotels or to rivals. Weekend getaways are a good example. If Vrbo can convince travelers who've never booked with the brand before that it has options for quick escapes, it widens the top of its booking funnel, and that's a direct play for market share in a space Airbnb has long dominated. Airbnb's belong anywhere positioning has always supported flexible trip types. Pre-pandemic, the platform was really heavily urban. In recent years, it's been working to reclaim that dominance, and now Vrbo is making its own push into the same territory, even as it continues to guard its family vacation core. Interestingly, though, Vrbo's marketing still leans heavily on images of full homes, large groups, and extended family getaways, which is the brand's traditional comfort zone. But behind the scenes, the product offering is evolving to include more flexible options. For property managers with adaptable inventory, whether that means short minimum stays, urban apartments, or flexible booking policies, Vrbo may now be a more relevant channel than it was just a few years ago. If it hasn't been on your radar, now might be the time to take another look. All of these moves, promotions, merchandising, and more flexible trip types are part of a bigger strategy, getting more revenue out of each booking. Rather than chasing costly international expansion, Vrbo is leaning on Expedia Group's existing capabilities to bundle more value into a stay, which means pairing accommodations with extras like car rentals, activities, insurance, using the same tech stack that powers Expedia's other brands. It's a way to strengthen Vrbo's appeal, grow revenue per trip, and keep guests inside the Expedia ecosystem for more of their travel spend. There's another side to Vrbo's strategy. Promotions and more flexible trip types are about capturing new slices of demand from the same pie. But Vrbo is also looking to get more value out of the bookings it already secures, an approach that can lift profits without needing to grow market share. The idea is simple. Offer guests more than just a place to stay. By layering in easy-to-add services and conveniences, Vrbo can meet a growing expectation among travelers for bundled experiences, one-stop booking, and the kind of convenience that keeps them spending within the same platform. Guests increasingly expect convenience, and most major platforms are leaning hard into that. Booking.com already offers flights, hotels, car rentals, and attractions all in one place, and it's pushing its connected trip vision, where travelers can book as many parts of their journey as possible without leaving the platform, which is really fueling Booking.com's recent growth. Airbnb too has been moving beyond stays. It relaunched experiences this year. It added on-demand services like in-home chefs, massages, and generally it's been looking for ways to own more of the guest trip. Vrbo is now doing the same, but in its own way. adding value inside the booking to earn more per reservation without necessarily expanding into entirely new categories or markets. Earlier this year, Vrbo announced a partnership with Baby Crib. But basically, this partnership allows families to add cribs, strollers, and other baby essentials directly to their booking. Given that one of Vrbo's core customer segments is families with children, this is a natural fit. Vrbo also partnered this year with Rentable, integrating enhanced accessibility filters and features for guests with mobility needs, opening the door in this way to a significant and often underserved segment of travelers. Both moves keep guests inside the Vrbo ecosystem longer, encourage them to spend more with each booking, and differentiate Vrbo in ways that align with its core brand identity. And importantly, Vrbo can tap into the broader Expedia group infrastructure to do this, repurposing existing partnerships and tech rather than building from scratch or waging costly battles to break into new markets. The question now is, why not take the Airbnb route and push into more countries, more regions, more markets? After all, global diversification has paid off for Airbnb, and it does for Booking.com too. And when US growth slows, double-digit gains in places like Japan and Brazil keep the overall numbers strong for Airbnb. But breaking into a new market is not a quick win. It takes time, significant investment, and often means navigating complex local regulations, adapting to different guest expectations and behaviors, and sometimes building brand recognition from scratch. Vrbo could do it, but right now it has an immense, more immediate opportunity, deepening revenue in its core market and sharpening its competitiveness in the US today, not 2 years from now. Leveraging Expedia Group's existing infrastructure, merchandising capabilities, and partner network offers a faster path to impact. In the near term, Vrbo is focusing on squeezing more out of the US market, which also happens to align neatly with with current guest behavior trends. And in doing that, it's also building efficiencies. Vrbo's Q2 2025 results show a brand in adaptation mode, pushing promotions, expanding trip types, and adding bundled services to win in a tighter US market. Airbnb's numbers show that global reach can help offset softness in North America, but both companies are chasing the same guest behaviors: shorter trips, faster booking decisions, and more value in a single transaction. As for professional short-term rental managers, the winners will be those who adapt to these shifts before they become standard guest expectation. I'm Uvika Wahi with RC by PriceLabs. Thank you for watching, and I'll see you in the next video.